Let's bring on board then CP Gurnani, CEO and MD at Tech Mahindra. Mr. Gurnani, hi, good to chat with you. Thanks for taking time out. Firstly, demand momentum seems to have now been picking up. At the same time, the rupee appreciation is likely to hurt margins. How are you playing this situation, and will strong demand be enough to negate the impact of rupee appreciation on your margins, which has happened so far?
Aisha, to me, rupee versus dollar is a industry phenomena. We might like to believe that we have a way to manage the situation, but the reality is that we have to optimize in every situation. Yes, it is true that when the rupee appreciates, we have a negative impact on the EBITDA margin. There is a rough rule of thumb which says 1% appreciation of rupee lends to 0.3% decline in EBITDA. And similarly, hedging can always mitigate the loss to a certain extent, but there is a cost to hedging, and all I'm trying to tell you is that currency fluctuations are reality, and we should look at that as a notional correction or a momentary correction for a period. Indian IT industry has gone through this appreciation of rupee in the past, and we've overall been able to adjust ourselves, and wherever possible we have mitigated EBITDA losses. And I'm only saying is that whatever Tech Mahindra will do is not going to be very, very unusual.
Mr. Gurnani, why I'm asking is because your peer TCS last Friday in its analyst communication has said very categorically that momentum is strong in the markets like Europe and rupee appreciation will hurt margins in the first quarter. Can we expect that from you as well then?
I have already shared with you that this quarter, if you look at the currency fluctuation, the impact has been almost 1% appreciation of rupee lends to 0.3% decline in EBITDA, and we have had a currency fluctuation of almost 3%. So you are talking of a definite impact on the EBITDA margins.
So as percentage of your total receivables, how are you hedged?
I think it's about 1/3 of them that we are currently hedged, and there will definitely be some relief because of the hedging, but we are not 100% hedged.
What about the cross-currency impact? Because Tech Mahindra is no longer a dollar-dependent company; it is more like a global company. You get revenues in dollar, in Australian dollar, in euro dollar. So what will happen to cross-currency?
I mean, I do believe that most of the currencies in this quarter have, you're right. I mean, I do have a fair amount of my revenue coming in UK pounds and in euros, but most of my impact, I think, is getting neutralized, and there is a definite impact on my EBITDA.
Mr. Gurnani, give us some color on how you see the BT account panning out, and will there be further amortization?
BT as an account continues to be a strategic business for us, and the way I look at it is that this account has been a degrowth account for us. And as a company, as a part of our strategy, we have looked at degrowth in this major account of ours, and we continue to focus on not only on trying to stabilize BT and see if we can get it back on a growth curve, but in general, you have noticed that my telecom vertical has done well because we have been able to balance the challenges of degrowth of BT account, but it clearly is an account which hasn't been growing for the past few quarters.
So
how much do you see it contributing to your revenues in the next quarter then?
I don't think we give any account-specific guidance. So all I can tell you is that it is a degrowth account, but a very, very important and a very, very strategic account for us.
But Mr. Gurnani, at some point in time for Tech Mahindra, and I'm taking the clock back 5-7 years, BT was accounting for more than 40% of your total business. My understanding is that the total dependence has come down. What I want to understand from you is that by how much the percentage dependence or how much the overall dependence has come down by?
Nikunj, you are right that over a period of time our account dependence on BT account has come down. All I can promise you is that last quarter, if we clocked a revenue of $825 million US, it's in a very, very low two-digit number that we are talking about BT dependency.
Okay.
Mr. Gurnani,
low two-digit percentage point. Low two-digit percentage.
how's the deal pipeline then looking? Because you've roughly won deals about, in excess of $1.3 billion in TCV over the past 4 quarters. Is the momentum still strong? And if you could tell us a little bit more about what geographies, services are seeing strong demand for you right now.
Aisha, the good news is that if I compare the deal pipeline for the Q1 of FY15, the deal pipeline is definitely more robust than what we had at the same time last year. The management team's focus is to increase their win ratio. The management team's focus is to try and fast track the closer cycle time. But the deal pipeline is definitely stronger than previous year at the same time. In terms of segments, I see a fair amount of, focus by the, customers on enhancing operational excellence, on managed services, application management, development, engineering services, and cost optimization initiatives. We also have a fair amount of traction in the area of digital enterprise, analytics, and what we call as NMAX, which is network, mobility, analytics, cloud, and security. Overall, I would say is that about 60 to 70% customers are in application management services, DevOps, and application development. And about 30 to 40% of the pipeline is coming out of digital enterprise.
Mr. Gurnani, your peer recently announced a CEO appointment who's a renowned global face. How do you see this?
We're very excited that Dr. Sikka has become part of our community, and he was always a part of our community. It's just that he was in a product company, and now it's welcome to the IT services community. I know that Dr. Sikka is clearly one of the best-known leaders in the IT industry, and him having to come on the IT services side, I think it will only make the game more interesting, and we're really happy that Dr. Sikka has joined this industry.
Mr. Gurnani, you will not give me a guidance. That is not the company policy. But are you confident for FY15 you will grow at a run rate which will be higher than the industry average? When I say industry average, the NASSCOM growth projections?
Because we always can say that we try harder, and we will try and live. We clearly want to grow higher than the industry average.
So there's a difference in want and will.
Will becomes guidance, want becomes aspiration.
Okay, what you've shared with us is that you will be a $5 billion company very soon. And in order to become a $5 billion company, Would you be able to reach there in next year with the current roadmap, with the current growth projection, or somewhere in middle of the year we will get some acquisition news from you? Because that $5 billion is the landmark which you need to achieve. And to achieve there, how would you reach there?
I mean, Nikunj, let me again reiterate. We have 7 more quarters. 5 billion is an aspirational target. And yes, you are very right that M&A is expected to play an important role. I can only say is that as an organization, we are very active on the M&A front. We continue to evaluate opportunities on an everyday basis. We are looking at M&A opportunities across our main verticals, manufacturing, retail, BFSI, in competencies in area of network services, engineering services, and analytics. We will only do a deal if it meets internal hurdles, if it is value accretive, and it is strategic for the firm. I can only say is that for the sake of $5 billion target, we will not do an hurried M&A. I can also assure you is that any M&A has to meet the board's criteria and the benchmarks for M&A.
Mr. Gurnani, really appreciate your time, and these are VE hours for you in Berlin, so really appreciate that you could accommodate this interview request. The markets meanwhile are correcting. You could blame it on rupee, you could blame it on simple profit booking. What do we have? A weak market breadth. Nifty has taken a knock of about 30 points plus, and this is happening on a day when IT is in full bloom. So irrespective of strength coming in large cap IT, which by the way is a heavyweight group, the trajectory for the Nifty clearly is on the downside. That just tells you that how aggressive the selling is there in some banks, economy related stocks, mid cap stocks are also really falling apart. So for a change, the traders and investors who were chasing stocks, they are now throwing stocks, and with the exception of IT, there is no rub of green, at least for the broader market. So I'm going to change gears, move from a performing group to an underperforming group, the banking sector.